Hey everyone, Charting Man Dan of the Chart Guys, checking in on the charts. Before we get into it, I did an interview with TradingView, and that is a link in the comments of this video if you want to check it out. About 45 minutes long, talking about how I got started, the chart guys, charting, stuff like that. So daily candles look a little bit different than where we stand after hours because we've got earnings reactions right now to Amazon, Google, and Apple, and they are bearish reactions. Amazon and Google pretty much priced in their earnings. They were both up 7% today, which is a huge amount. And so now they're getting knocked back down. We'll look at them all individually in just a moment, but Apple had its first miss in 7 years. And so right now the S&P 500 is down about 0.7%, and QQQ is down about 1.3% or something along those lines from where we closed. The futures charts reflect that. So that big upper wick that you're seeing is showing that bearish reaction. So we broke the right neckline, and again, we know from there we zoom out and we care about the August high, knowing if we do not break the August high and start consolidation from here, that we're watching for then a monthly inverse head and shoulders. And again, weekly consolidation from here should not surprise us. The reason being, we've set a higher low every single week, 6 weeks in a row. And eventually you reach a point where there's nobody left to buy, and there's no shorts left to cover. And we reached that exhaustion point today where we just were bull control the entire day, grinding up, no sign of any weakness. There's your first profit taking, 5-minute back burner bounce into a decent close, and then a double top on the initial reaction, and then there's your bearish reaction. So where do we stand? Bigger picture. Futures, we still have a lot of space for a 4-hour higher low on the S&P 500. It's the NASDAQ that's getting hit a little bit harder here with the earnings. But again, I mean, the 4-hour RSI was mid-80s up at the highs. So we know consolidation is going to be inevitable. Trying to nail that top's a little bit tricky, but we're going to be watching for 4-hour higher low attempts. And the big thing for me will be, now that we look at, QQQ, do we confirm hourly downtrends? SPY and QQQ. So we've got the low of yesterday, the high of today. We're going to look for a higher low compared to the low of yesterday. And if the bears confirm an hourly downtrend into daily consolidation, it will be notable to me as far as setting a temporary top. Right now, QQQ is testing the low of today. And so that's going to be in play tomorrow. And if it breaks, there's a gap to fill at 303.43. So that's a short-term target for bears. And again, it won't be surprising when we see daily consolidation. And the question for me is, do we set a higher low holding EMA 12 as we have every other period of consolidation on the way up for both SPY and QQQ? So that's the telltale for me as to whether or not weekly consolidation is shaping up. Daily consolidation is shaping up. It's just a question about the longer term time frames. The dollar, daily bear flag confirmed with follow through. Now we got a big old bounce. Bulls will have to confirm a 4-hour uptrend and get over 102.61 if this move is going to be for real as far as trying to shape up a weekly bounce. So definitely 2 days were pretty much FOMC through 3/4 of today, all bulls. And now signs of exhaustion because we've just ran so hard in, essentially 7 hours of trading or whatever it was. SMH. So again, the daily candle looks fine, all bulls, but you got to go after hours and see that we are down $1 plus. But again, it all depends on the time frame that you care about. Because yes, the bears are now in control of the short-term time frames on this reaction, but SMH can pull back to 235 and still be in a daily uptrend. So again, it's going to be, how do we respond to hourly oversold conditions? Do the bulls buy the dip aggressively? We're going to be watching for an hourly back burner on many names. Do we hold daily EMA 12? Those are the two most important questions for me from here. How do we respond to hourly oversold? S&P 500 futures. Let's see if the NASDAQ futures is close to hourly oversold at all. No, not even close. So we'll be watching for it, but bears have to prove it for a bit now to get to hourly oversold. And there's a bunch of names that I'm going to be watching those hourly oversold back burners. And again, the back burners are great. I'll go over a trade that I took this morning on a back burner. Google Chart Guys back burner if you don't know what that is. NVDA, also with an extremely strong close, but we're down 2% after hours. So again, that low of the day, not in play at the moment. We're down at 212. The low of the day was 207. So essentially, this is the pullback. Wherever we bottom out, the bears must confirm the hourly downtrend to prove to us that notable daily consolidation is taking place. Hourly oversold, daily EMA 12. Tesla, bearish reversal candle. After hours, we're down. Pretty notable sell-off into the end of the day before after hours. It was a more brutal sell-off than SPY and QQQ saw. And look at the relative weakness here. This is how you can just visualize relative weakness. QQQ's high of the day, new high for 20, 30, or for an hour, we hit new highs. Tesla hit the high of the day at the same time initially, and then did not hit a new high of the day after that. So that's relative weakness. And if we look at Tesla divided by QQQ, we'll see from that point forward, bears. So relative weakness on Tesla, and watching again for hourly oversold conditions from here. If they align, hourly oversold, looking for a daily higher low, we'll be watching for a bounce play there. Still a ways to go. RSI is 50 right now. Bears would have to drop the price another 4 or 5% or so. XLV, inverse today, just inverse in general to big tech. So again, the way I'm viewing the market right now is healthcare led the way up while big tech was dropping. Healthcare topped out, and then after a week of topping out, healthcare grinded down while big tech bounced for 5 weeks. And so the question that I have is, once we see weekly consolidation in big tech, does that mean healthcare bulls start to see the rotation back in? And UNH was real weak today. This is one of the major holdings in XLV. We were talking about how the 4-month time frame, again, just going back in time, to start the new year, my bear pick was UNH. And the reason was every single 4-month chart that looked like this 8-12 months ago pulled back to EMA 12. And so I was just looking for it to be a laggard, to pull back to EMA 12. And so that's potentially shaping up. We broke the stair step, and we've obviously shifted momentum significantly, but it was a really nice tight range that broke bear to start the year and is following through. Unfortunately, I'm not going to win our stock picking contest because while it may be down 11% from my pick, other people chose MARA long for their pick, and they are obviously way more volatile and up 142%. So I'm not really close. So watching to see if XLV rotates or not. A bear would love to see everything dropping together. But again, when's the last time we've seen that happen? As far as everything at the low of the day at the same time, it's been a while. XLF, daily inside bar, it was a non-event today, non-factor. Didn't really matter at all. Key support that matters to me is 35.97. If 35.97 holds, the bulls are just fine. If we lose that level, we lose the daily uptrend. So that's my benchmark support guide from here. IWM is actually holding on well after hours. We're flat right now. Look at this lack of any reaction. We're pretty much where we closed. The daily chart is increasing bull volume on the breakout. And we are testing the August high. We know that August high is important for the NASDAQ and the S&P 500. IWM is right there. 200 is resistance. We got within 0.5% today. So IWM bulls holding well. And again, that was growth names. Pretty much the last month has been big tech and growth rallying off the bottom. Biotech sector following through, increasing bull volume. Good signs. Daily EMA 12 is our guide. Next resistance after 92.60. We're looking up at 95.18 as a major level. If you get over 95.18, you're at the highest levels in 9 months, something like that. And again, the bulls are trying to confirm a monthly uptrend. And if we break 95.18, that is a monthly higher low and higher high. AI, I've been loving AI volatility in both directions. And, you know, all month I've been trading Riot and MARA, and now AI is my focus. And I got my watch list. I put the video out over the weekend about the AI sector, and I'm going to make another one probably this weekend because I've just been narrowing down my list. But the beauty of AI, I mean, the trading today was just so good. Look at the 1-minute equilibrium to start the day. Bottom fish, top fish, bottom fish, bear break. The bear break of 22.26 breaking gets about 4% plus of follow through in an hour. Or less than an hour. That's a minute time frame. That's follow through in 15 minutes. 4% follow through in 15 minutes. So I traded it short, and then I played the 5-minute oversold back burner. 5-minute oversold back burner. That's not it. 5-minute oversold back burner. I got filled. I posted on Twitter, but 2150. Exit scaled out a few on the way up. I was all out by the low 22s. I didn't see the move all the way back to the high of the day. Busy day today, but a good one. And now it's a bearish reversal candle on the daily. We're testing the low of the day after hours and breaking it. And so we're watching for daily consolidation. Stair-step pattern. AI needs to cool off. And we're going to be looking for hourly oversold conditions. Back burner trade scouting a daily high or low. It just takes the, in a bear market and in a lack of strong trends, it takes work every day to find setups. What am I going to be watching for today? And this is just why I call it the back burner. I know that I'm watching this trade when it comes to me. That's it. I just wait until it comes. And then that's the trade that I'm looking for. Riot Bulls saw nice follow through, but after hours we're down a bit. So keeping an eye on, still going to be watching these names to trade because the volatility is great. And if Bitcoin tops out, and it is rising wedgie, if Bitcoin tops out, I'm definitely going to be scouting a swing short in Riot. MARA, as we know, is much weaker. MARA is scouting a daily head and shoulders and scouting a lower high to be the result of this bounce. It's down much more after hours. It's below the low of the day after hours. So MARA is looking like the place to be as a bear, but again, shares to short, hard to come by. And once it is time to roll over into weekly consolidation, you're going to find that shares are not going to be available to short on many platforms. So keep that in mind as well. What else we got for hype names? Cannabis names, keeping an eye out for tops there for weekly consolidation. Perhaps blow off tops. TLRY, big move up, big upper wick, but weak close. CGC still holding on. Just watching for daily consolidation after bulls had a real nice run into the fundamental events of the week. Gold looking a bit toppy. This is the most bearish day we've seen on gold in over a month. So bull break, zero follow through. If we drop down and break 1900, weekly consolidation starts following through more significantly. The miners have a daily head and shoulders shaping up. Right shoulder formed. Drew that out a couple days ago as a possibility. And bears want to break 31.21. Look at that volume. That is very notable volume. So again, we're just getting some signs. Are we about to see a weekly bounce in the dollar and weekly consolidation in the metals and miners? Maybe weekly consolidation in the broader market. Bears still have proving to do there. Dollar bulls still have proving to do. But again, we're just watching for the initial signs of it. And that's a head and shoulders. Silver, bull break, fortunately, without much follow through. Heading back down towards support. Oil still weak. No bottom yet on oil. And the energy sector dumped big time today. While everything was up, energy was down 3%. So from this inability to break the all-time high, the energy sector is sold out real hard. We've dropped 8% in the last 5 days, which is a lot for the energy sector. I'm keeping an eye on this pattern. We've got, I don't love this uptrending line. If we bounce off of it, I'm going to love it a lot more because then it's going to become a lot more valid for me as a trend line to be watching. But I mean, look bigger picture, 2-week time frame. High, low, lower high. Can we confirm a longer term downtrend? What's the 4-month chart look like? Stair step. Might be time for some 4-month consolidation in energy. Monthly EMA 12 is a real nice guide to be keeping an eye on. And natural gas still weak. 4-hour bear flag confirming off EMA 12 resistance. We'll see if the bears are getting exhausted, but again, it's just constant smashing down of the price. Daily RSI getting crushed, but we've been this crushed before. And that is that. So I'm definitely protecting my portfolio at this point. As soon as I saw the bearish earnings reaction, I grabbed some SPXS. But watching for the daily consolidation that's inevitable. Watching back burners. Again, coin is another name. Look at that breakout on coin. Hourly back burner will absolutely be on watch. next time we see it. Another crypto name. So I'm watching for hourly backburners in AI names, maybe in some crypto names. We'll see. Definitely in SPY and QQQ. And our lead bulls, Tesla, NVDA, Meta, of course, after its bullish earnings reaction. It was up 23% today. So definitely bounce trades on the menu. But watching those responses to the hourly oversold conditions and daily EMA 12 supports. Appreciate you watching. Check out the TradingView interview. Do good things. Have a great weekend. I'll try and put out another AI video this weekend. We'll see. Thanks again. Do good things. We'll see you. Get outside. Plant some stuff. Life's good. So adventure time. We are heading back from Vegas, going to the East Coast, heading to Florida for me, and booking it through Texas and Mississippi in the South. Didn't take a whole lot of time. It was winter at this point. We're talking December, January. So snow on the ground, and I didn't think it got that cold in Texas, but it does. But there were some great state parks, and state parks are kind of like national forests in the sense that if you're there on weekdays and it's not the summer, there is nobody there. So I didn't expect to see frozen water in Texas, but some nice views and some nice hikes. And this was a little state park, and I was literally the only person there, camping out by myself and trails to myself, and it was great. So just avoiding the rush hour and not feeding the alligators can give you some solitude. And it wasn't too cold. Definitely had to bundle up at night, but certainly after that 12-degree night in Zion, everything else was just a bonus. And some nice trees and nature and angles of sunlight at golden hour. And from here, I did go on a little road trip in Florida, so we'll cover that next. And that's the end of my Honda Civic. So had that Honda Civic from high school, drove it across the country twice, one time with my buddies from North Carolina to California, down the coast, back across the South, through the Occupy movement, then took that individual road trip, so certainly spent a lot of time with that little guy. It's a good car. Never really caused me much trouble. And sent it off. I donated it that year, and my taxes were such that the donation didn't do anything for me, so I could have just given it away to a friend. But hopefully it helped out somebody. What else we got here? CBD. I found this photo. This is 5 years old. I was taking CBD before it was the hip thing to do. I forget which company made that. It certainly wasn't public, but probably not trustworthy either. Nice to see that we are getting some legitimate companies and some standards. Looking forward to standards in CBD because we don't know what mold is on those flowers that they're getting their CBD from, and we don't know what extraction methods they're using. So we do need some kind of regulation in that industry to ensure quality standards are kept. So I am looking forward to that part of things. And I'll see you all in the near future. And we'll go over a little Florida road trip, which is cool as long as you don't do it in the summer. And I made that mistake, and it was miserable. So have a good night. We'll see you soon.